Hi, I'm Megan. I'm here today to talk about a commonly misunderstood part of insurance, and that is a building limit. So one of the common things that I see is the building limit being too low. And I can certainly understand why someone would want to insure a building for a lower limit. It goes to reason that a lower limit means a lower premium. And that usually is true. However, you're going to have other limitations for coverage in your policy that are going to follow a low building limit. Now, when I'm writing an insurance policy for someone and they have a claim, I want to know that West Bend's going to come in and be their silver lining. I want to know that when we've written this contract, we've done everything that we can to make sure in the event of a claim, our insured is going to be made whole and get back up on their feet. The insurance industry has a few categories for building limits. There's two main players, and those are the two that we'll talk about today. The first and most common is replacement cost. Replacement cost is the cost of building materials and labor that it would take to rebuild your building. The second most common is actual cash value, and that's replacement cost, and we said that that was building materials and labor minus the depreciation of your building. So if you've got a building that is older, everything about your building, maybe poor maintenance, it needs new siding, new roof, example, anything about your building that would cause it to depreciate, that's going to be figured into the actual cash value. So the benefit to actual cash value is typically you're going to have a lower premium. I'm afraid though this does limit the coverage that you have available to you, and to me those limitations far outweigh the benefits of actual cash value. Is that it doesn't get you back up onto your feet when you have a claim, and that's the whole purpose of an insurance policy. So let's say you have a building that should be insured at a replacement cost for over $100,000, and we've got 90% co-insurance on this building. The minimum limit that you should have on your building for this policy is $100,000. But let's say you only insure it for $75,000 and you have a $25,000 loss. So in the event of the claim, the insurance company is going to look to see that you have proper limits on your building. Your claim will be paid less the percentage that you're underinsured. So we have a $25,000 loss. Our building is 25% underinsured, so we're taking $25,000 times 25%, and your $25,000 loss is only going to be paid out at $18,750 less your deductible. And that's something that no one wants to see when a claim happens. So how do you determine the proper limit for your building? Well, I'd start with your independent insurance agent. Have a conversation with them about what you want to see happen if, say, there is a fire in your building. If you lose 25% of your building, if you lose the entire thing, let them know what your expectations are for the claim. They can use their expertise and knowledge of coverage to help you make that decision. Now, the building limit can be a little bit trickier. Your insurance agent may have access to a generic building cost estimator, but that's probably not the best place to get your limit. Like I said, these are generic, and if you've got a historic building with beautiful wood molding, marble floors, it's not really going to be able to incorporate the unique aspects of your building into what it would cost to replace it. There's folks out there who are specially trained to do this, and I would look into hiring one of them. It will definitely be worth the money spent. So make sure to discuss your building limits with your agent so that in the unfortunate event of a claim, you will be made whole.